A traditional class of asset managers that employ derivatives is, of course, hedge funds. And while they all have different strategies, most will use derivatives to either manage risk or access higher rates of return, or potentially both. Ivan Scherman won the 2023 World Cup Championship of Futures Investing with a 491% return in 2023. He trades a wide range of assets in his GrowWise Fund. But a key differential is the automation of decision-making. So I spoke with Ivan a short time ago, and I asked about this strategy. And just as a side note, his accent is a little strong, so we've put some subtitles on just to make sure you don't miss anything.
The GrowWise Fund is built on a fundamentally different foundation compared to traditional hedge funds. We don't rely on forecasts, market opinions, or discretionary decisions. Instead, we implement a systematic rules-based methodology rooted in financial engineering, data science, and quantitative modeling. So what truly sets us apart is that we apply this methodology across all types of assets and markets, not just equities, but also energies, industrial metals, precious metals, agricultural commodities, livestock, currencies, regulated crypto assets, bonds, and more. So we operate in all market directions using multiple trading logics adapted to each asset class. This approach enabled us to reach a level of total diversification so that systematic risk is neutralized. We never put all our eggs in one basket. So a collapse in one market has no impact on the others. For instance, if we are long the S&P 500 and it collapses, this situation wouldn't have any effect on our natural gas positions, our coffee positions, our wheat positions, our palladium positions. That's why this structural design helps us to shield our fund from black swan events and allows us for consistent and resilient performance.
You've built a reputation as one of the top algorithmic traders globally. Can you just take us through the core philosophy behind your quantitative approach?
Certainly. Yeah, my core philosophy is that markets are not random. They reflect human behavior, which tends to repeat over time. However, distinguishing between randomness and true behavioral repetition requires more than traditional financial theory. That's why I turned to engineering. I began using models from signal processing and system engineering, tools that measure velocity, direction, signal-to-noise ratio, trajectory filtering, and more to isolate meaningful patterns from noise. Engineering gave me the language and framework to determine which objective conditions must repeat for an asset to move in a specific and predictable direction within a predefined probability range. So traditional finance, which is heavy reliance on subjective interpretation and human bias, doesn't offer this kind of clarity. In contrast, our quantitative models are grounded in empirical validation. So we only take positions when the evidence shows a recurring behavior with an edge, of course, meaning that the probabilities are titled in our favor. So that's what transforms trading from a wager into a scientific, predictable, and systematic process.
What mechanisms are in place within the GrowWise strategy to protect capital in volatile environments?
We trade every position as part of a larger risk ecosystem. Every position is sized automatically based on real-time volatility, correlation, and predefined capital exposure thresholds. Stop losses are not static. They adapt dynamically to market behavior. ensuring that the system responds instantly to changing risk conditions. But crucially, the system also monitors correlation in real time across strategies, assets, and timeframes. So this allows it to reduce exposure when multiple components begins to behave similarly, avoiding concentration of risk in this case. But I would say, more importantly, our protection starts before we even enter a trade. If the conditions in a market don't match one of our validated behavioral patterns, we simply don't participate. The robot doesn't recognize volatility environment, and that stops it from opening a trade. That in itself is a very powerful filter. And everything I mentioned is not a discretionary process, it's fully automated.